Okay, today is May 3rd, and I want to do a recap on the day before I get into the lesson. The lesson is going to be on the ABCD pattern. So let's talk about today. My first trade on the day was SEII, and I made a frustrating $145. Now, the reason this was frustrating was before the market even opened, I put my hands together and I said, Kevin, allow for pullbacks on the day. There will be pullbacks. Allow for them. Do not sell too early. And I sold too early. Now, I will show you my P&L and entry and exit on this SEII. Entry 442. My first exit was at $5 on half, and the rest I sold at $4.57. Now, the $4.57 exit was painful, but the $5 one made sense. $5 is a very strong resistance area. This is a multi-day play, so I get in at 442, it goes up to $5 near resistance, I sell half, and I say, okay, I'm going to allow for pullbacks. And so it pulls back, and for a few minutes, I didn't sell, and I said mentally, Kevin, place a stop loss below 450 in case it breaks below that, but if it doesn't, just allow it to keep going. And I didn't do that. Volume was fading some, and I just ended up selling it because there were other plays getting the momentum, and I didn't think it was going to return to SEII. The reason momentum was kind of spread on different plays, though, is because of yesterday. Now, the start of May kicked off with really hot momentum, and that was yesterday on IMTE. Now, this stock went from $2.29 all the way up to over $40 yesterday. There were a lot of people that missed this play because the big move happened near lunchtime when a lot of people are out of the markets from like 12 to 2. From understanding that, we knew there was going to be a lot of sympathy plays coming into the next day. Now, this is when you can capitalize on people's FOMO, the fear of missing out. See, amateur traders see plays like this that go from $2 to over 40, and they just think that every stock they get in is going to go up. They just hold and hope, versus actually predefining their risk before they even ever enter the trade. But more professional traders, they see what happened on IMTE the day before, and they understand sympathy plays are going to be coming in the next day, and a lot of people are just going to be hopping in because no one else wants to miss the next big play. And so we had that on several plays throughout the day. But the top gainer today was VVPR. Now, VVPR did not have as big of a move as IMTE yesterday, but this is still a supernova. I mean, we still went from $1.50 to $6.69. And this was a great play. Now, I didn't have the funds left to trade this stock, but I saw this pattern developing. Now, we have what's called an ABCD pattern. And this is a prime example that I want you to learn from and prepare it for some of the next plays coming up. The good thing about this pattern is you don't have to be early. You can miss the initial spike and still be able to profit off of this pattern. VVPR went from 150 all the way up to about 530, and then this pattern started forming. So with the ABCD pattern, you don't have to predict, you can actually just react, which is what we should be doing trading anyways. What we want on the ABCD pattern is there to be an initial spike and run up. We want there to be a flag, just like on a bull flag. So we have here the pole, and this is your A. I know this sounds bad talking about a pole and an A, but get your mind out of the gutter. So we have the pole, and then on the first big pullback, that's when your B forms. So this is the B right here at 385. That's your B, and then C is your higher low. So your first low is B, and the second higher low is C. So what we have is the A on the high of day, B on the first pullback, and C on the higher low. Now, it's important that this stock forms a higher low because that's going to tell us that there's still strength on this stock. Another thing to keep in mind is there's two lower shadows right here where the C is forming around $4.30. Now, that signifies that there's buyers holding this up. That even though the stock is coming down to form this C, there's buyers that are pushing these candles back up. This can also be called a bullish pennant, but also an ABCD pattern. With this pattern from points A, B, and C, you can see the trend lines are getting squeezed together. And that's vital. You want higher lows and lower highs to get squeezed together until you see this volume return right here. So we had volume kind of fading away, and then we had a huge spike in volume when the stock got squeezed together around the C point. The best entry on the ABCD pattern is around the C point when the stock makes the second higher low. The reason is because you're managing your risk very well. When you're getting in at this point around 430, you know that a break of the trend line right below you is your exit point. So you're risking 5 cents, and look at your potential reward from 430 all the way up to 669. There's a lot of reward on the way. Now, I would suggest that you scale out at the high of day, because not every stock is going to go from 430 to 669. Actually, a lot of stocks are going to double or triple top at the high of day. So that would be right at $5. $5 is a tough resistance area just as a whole number alone. And not only that, it's tough resistance on this chart. So we got stuffed at $5 once, twice, 3 times, 4 times, and then 5, 6 before it even broke. So I would suggest scaling out half your shares at the high of day, just so you know you're locking in some profit in case the stock triple tops and comes down. But if the stock actually breaks through the high of day, you still have half your shares to make a lot more money on. The ABCD pattern is a great pattern because of the risk-reward factor in this. You're managing your risk very well. Don't always feel like you got to chase stocks as they're spiking up. Wait for a pattern to develop and form and snipe out the perfect entry.